Today, let's talk about the cyber cycle, a momentum indicator oscillator developed by John Ehlers that comes to show and identify cyclical potential reversal points. How is it done? By calculating the median price, the average, high-low average, and applying multiple steps of smoothing it by applying a weighted average on it in a continuous progress. And the result, a smooth indicator that is coming to filter the noise and help us to identify with high, I would say, probability, high reliability, cyclical reversal point, cyclical behavior of the market. So let's break it down. Where do we find this indicator? So you go to the indicator section, oscillators, and here you would be able to find the cyber cycle. Click OK. You can predefine your style of the indicator, the lines, the visibility at the levels if you would like. By default, it comes with the alpha of 007, which is one of the parameters smoothing the results. So here is the indicator. So what do we have here? Cycle line and trigger line. You would be able to see that cycle would be the red one and the trigger is the blue one. By default, of course, you can predefine that. So the cycle line, a smooth version of the cyclical movement, cyclical behavior of the market. And the trigger line is one bar shifted of the cycle line. And the result is what you see on the chart. So where does that come to help us, the traders? One, to spot reversal point, to spot potential top and bottom and find the cyclical reversal points. Two, combine that with trend indicators and find these situations when the correction is over and help us to join the bigger trend and to ride the trend. Another way it helps us, the traders, the placement of the protection. Because if this indicator is able to help us to find cyclical peak and bottom, it also would help us to understand where would be a legitimate protection level. Now, very important thing to mention is that this is not a magical indicator, and in ranging markets, it could produce false signals. What do I mean by that? If you take a look on the ranging markets, it would be able to produce fake signals because the market will not have a real momentum. Okay? To prevent that, traders love to combine that with trend indicators, with other momentum indicators, and to find optimized setups for their trades. So how do we read this indicator? Crosses to the upside of the cycle line above the trigger line usually hint a potential bullish continuation, while crosses of the cycle line below the trigger line usually will hint of a potential bearish trend, a bearish momentum. So this indicator would be classical for conditions where market peaks and reversal comes, but also when correction takes place, market takes the bottom, and then the market retraces and returns back to the original trend. Another thing, due to the way it works, could help spot divergences. For example, when the market is getting tired by and comes to the end by its trend, for example, at the end of the bullish trend, but still makes higher highs, the indicator starts to make lower highs. And that's an indication that these cycles are not able to create higher peaks. Something happens in the market, it slows down, and a potential reversal could come and take place. You can also apply this indicator in cBots to automate your entries and exit, for example, on crosses when the cycle line crosses above a trigger line, you can automate an entry to the bullish direction. When the cycle line crosses below that trigger line, you can automate it to make a sell trade for you. And if you enjoyed this video and would like to enjoy more trading insights, trading tips, indicators, so much more, make sure you follow this channel.